Greetings, Professor McKee here with another quick Excel tip your finance professor wishes you knew. In this video, we will learn how to use the MIRR function in Excel to find the modified internal rate of return for a capital budgeting question. In any intro finance class, you will have a unit on capital budgeting, and we professors will always have questions where we give you a schedule of cash flows for the investment project and then ask you to use a decision rule like modified internal rate of return to determine if the project should be initiated. If you want to ace those questions, this video is for you. So I prepared a standard question here asking us to find the modified internal rate of return. It's the same schedule of cash flows as the other videos in this playlist. And with any of these capital budgeting questions, it's best to take that verbal description and turn it into a timeline of cash flows. So we have initial expense of 400,000. That's going to be negative 400,000. We have positive expense of 100,000, 120, 125, 130, and 135. So this is all of our cash flows. Our WACC for the project is 12%. So I put in 12% next to WACC. And now we want to find the modified internal rate of return. So we take M equals MIRR, open parentheses, and we first put in values. This is just the array for our timeline. We've already constructed it. We just click and drag from year 0 to, in our case here, year 5, comma, and then we need the finance rate and also the reinvestment rate. Now for both of these, we're going to put in the same interest rate. We're going to put in 12% at B8 for finance rate and B8 again for the reinvestment rate. And if you remember how modified IRR works, one of these rates is telling Excel, this is what we use to put all the negative cash flows back at year 0 and one cash flow, and also putting everything, all the positive cash flows back at the last year, and then doing the IRR analysis. But for our purposes, we're pretty much always going to be using the same interest rate for both of those calculations. Hit enter, and we have our modified IRR, it's 14%. If the question only asks for finding this interest rate, then you're done. But many times we're going to also be asked to interpret modified internal rate of return and tell the company, McKee Inc., should we build a warehouse or not? So the decision rule for modified IRR is identical to an internal rate of return. We compare it to the WACC. If we have a higher interest rate that's greater than the WACC, which we do, then we would say this project is going to add value. If it's below 12%, then we would say, nope, don't do it. It is going to subtract value, and you should not build the warehouse. Since we've used cell references here, I can take this spreadsheet and I can apply it to any other modified internal rate of return question. I would just need to change my interest rate or change the timeline and update the values here if I need to say include additional years or remove some years from my array of the values. And I could apply this to any question. So with this single function, you can now find the modified internal rate of return for any question your professor might throw at you. If you found this video helpful, please comment, like, and/or subscribe so that other students can find this too. Happy study.